Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 10th of October. Starting off with the FTSE 100, which is in this rising trend channel. Been in place since for the last year, basically. Bounced off that quite sharply, actually, earlier in the week. But we have the 50-day line there at 82.60 as initial resistance, and then after that up to 83.55 in the top of that falling trend channel from May. We do break down. The worst case scenario is heading down towards 8,000 in the floor of the channel, where it meets the 200-day line there just at 80.35, but hoping that the market is dead enough not to move too much from the 8200, 8300 area. RSI at 47, so glass half empty at the moment, but as I said, hoping that 8200 or 8180 to 8200 will hold for this market. Moving along to the DAX, which is in a more normal mode at the moment. Here we've got the market bouncing off 19,000, but looking obviously for 19,500 to be cleared and then head up to the top of that channel from this time last year as high as 20,200 by the end of this month. Worst case on the downside at the moment, another test of the 50-day line at 18,500. But with the RSI at 58 and bouncing above neutral 50, it looks as though hopefully we'll stay on the right side of 19,000 or at least 18,900. Next up is the Dow, and here beautiful price action for this market, finding support above old resistance. The old resistance there, 41,600, the new support around 41,800, and above that, looking for the top of the channel there, just in time for the presidential election at the end of this month, 43,300. The number there, and I suppose the way things are going might get there a little bit earlier than the end of this month. If there is a rug pull, worst case would be back to the 50-day line there at 41,000. But that doesn't look as though that is going to happen. Moving along to Bitcoin, which is not in quite such a, or hasn't been quite such a chirpy state in the recent past. Here we've bounced off the 50-day line again. That's just above 60,000. We failed at the 200-day moving average, so really sandwiched between those two key technical indicators. Want to see an end-of-day close through the 200-day line to give us 67,400 and the chance of a break higher after 6 months of rather irritating consolidation. On the downside, hopefully nothing worse than the upper 50,000s, but obviously the pattern here has been for a zigzag within that falling trend channel from March. RSI at 45, so again slightly tipped to the downside. Moving on to gold, which had a little bit of a setback, or has had a setback this week. The old resistance there back in the beginning of last month, or early part of last month, 26.20, and we're there very close to that now. Got the risk of heading down to the old resistance area from August and the 50-day line at 25.66, and maybe that's what we have to prepare for. We haven't been able to accelerate up towards the top of that June channel yet. 2,700, and the top of that December channel has been basically the best we've seen so far. Moving on to crude, where World War III scare seems to have fizzled out a bit. Here we've failed at the 200-day line, and we're back near the 50-day moving average at 72.40. Below that, actually, we could head back lower again. So it looks as though so far we've had a bit of a false dawn on the upside. We could have headed up as high as $81, but so far it's that 200-day line which has failed. The market's failed at that level for the umpteenth time since the end of July. Moving on to the stocks, and starting off with one of today's brighter RNSs, which is Artemis. And here you can see we're in this falling trend channel, but we've gapped higher above a rising 50-day line. We already had a bear trap island reversal July, August, so this does actually look like a very strong setup. The minimum here should be a penny, hopefully by the end of next month or even sooner than that. And then obviously we've got the 1.8 area, which was basically 1 year resistance. But just in terms of the setup there, it does look as though Artemis is on its way. In fact, a second bear trap island reversal with the gap down last month and the gap higher this month. So looking very good indeed. On to Atlantic Lithium, which has also turned itself around in the recent past. We managed to just nudge the 200-day moving average there at 19 pence. In the recent past, the 200-day line or just above it has been the sticking point in terms of resistance. So maybe we were a day or two away from a move to 20 pence and then we fell there. But at the moment, the longer we stay above the old support there from basically July at 18 pence, the greater the chance of a move up to the mid-20s for Atlantic Lithium. Next up is one of the most followed stocks around, Avacta, and here actually gapping up today, so that is quite a coup. Obviously, we've still got a red candle, but gapping up today. 52 pence was the end-of-day close trigger for a potential move back up to fill the gap up there to 64 pence, and so far we are on track as long as we stay on the right side of the 50 pence level. But end-of-day close at 52 pence plus today could be the sign that Avacta is going to shake off that Deutsche Bank-inspired sell-off that we had last month. On to CAB payments for the second day in a row now. Here, the situation looking quite chirpy. Yesterday we had the market above the 200-day line there at 112 pence. We were looking for up to 133 pence at the top of that rising trend channel. I suppose we should get that by the end of this month. Now we're going to a golden cross as well, so above that 200-day line, 113, looking as though we're set fair for a move into the 130s for CAB payments. And it's so far it's been a relatively smooth recovery after the rebound from a rising 50-day line. Castillo copper is next, or Castillo if you're in a Spanish persuasion. Here you can see a double bottom, triple bottom there around 0.22, gapping up today and looking for the shares to head up to as high as 0.48 by the end of next month. It's a punchy call, but you never know while we're above the floor of the channel there at 0.25. So let's see if Castillo can step up to the plate. Also stepping up to the plate is Genedrive at the moment, trying to. Here we've got neckline resistance there, basically around 2.25 pence. We're actually above that now, so looking for the shares to not only head up to the 50-day line 2.46, but even up to the 200-day moving average at 3.8 by the end of next month. As you can see historically, or at least in the recent past, the 200-day line has been a magnet for the price action, so relatively confident that that could be delivered. It's sort of overdue now on that one. Gulf Marine Services is next, and if I remember correctly, there was an RNS today, a contract win. The shares have gapped up through that resistance line there from back in April around the 16 pence level. Above that, we're basically looking for the shares to have another push or a spike through to the 20 pence area over the course of the next 4 to 6 weeks. Only back below 15 pence in the floor of the channel there from November last year, really delaying the upside scenario. Slow but steady progress here at Mkango. Keeps trying to test in the 5 pence zone, but I think we've done that like 4 or 5 times now, and we've got a rising 50-day line, so that suggests that we are ready to go. Rising 50-day line off the low tends to be a decent leading indicator. We're looking for 10 pence by the end of next month, or at least back up to the 7 pence area, which is post-July resistance for the shares. We've covered the next stock quite a few times, Ovoca, and here looking for the shares to make good on the bear trap gap reversal that we had last month, where we've got an uptrend line there around the 1 pence area, and above that looking for 1.7 pence by the end of this month. Best case is up to 2.2 pence by the end of next month. On to the last two. Haven't looked at Supreme for a long time. Here we've broken a line of resistance there around the £1.56 level. Above that looking for at least the 50-day line towards £1.75. Best case is by the end of the year up to £2.20 in the top of that 1 year rising trend channel. Finishing off with Tern, where every day is a bonus in terms of there not being any fundraiser, not being slapped by the bears. Here we have broken out of that falling wedge, 1.35 pence. Basically looking for the shares to make another test of the 200-day line area at 2.25 pence. Maybe as soon as the end of this month, fundraisers, placings, etc. Permitting. That's it for me today. More updates tomorrow.